Hi, this is Brian from quantlabs.net. I just wanted to give you a brief overview of the new set of models that have been completed over the last week that are now part of the premium membership. That's what you're looking at currently right now. And I just want to give you a brief overview of each of the different models that we have live now reporting as part of our usual rotation of different models that we have. There's traditionally, before these 15, there was 14, so now we're up to a total of 29 with these new 15. The first model I want to show you that's new is called the Sharp ratio. And basically, the Sharp ratio is a universal measurement of performance on a particular asset or portfolio or whatever you want. Right now we have one stock called nman.st, which is from Stockholm. Here's the Sharp ratio for that, which is 7.6%, which is quite good. And these are measured on the end of day closing for since the inception of the stock. So there's a variety of different Sharp ratios for the best performing stocks that we track, as well as other assets, but I've gone over that in a previous video. Another important model is something called general stats, which I'm going to show you right now. The general stats is quite useful for people that are more into analyzing curves. In this case, we have this one called imail-b.co as an equity. Here's the variance that we measure, the skew, the kurtosis, the mu, which is the same as a mean, the standard deviation. And we also measure the volatility, which we have different metrics of different types of volatility, which gives an average right here. So in essence, we do all this. This is all estimated. Again, this is for all our premium memberships, so you need to get access to the membership to get access to this data. And I do plan to have some video sessions to explain all these different models, what they mean, and just give a high-level overview of the algorithms used to generate this data. So we've got the Sharp ratio, we've got this curve analysis stuff, including your volatility. Let me show you another prediction volatility. Let me try one of these guys here. Hopefully I'm going to be able to find what I'm looking for. And obviously this search capability is quite powerful. Just got to know what you're looking for, obviously. So in this case, we're back to our nman.st, and this gives off a volatility statistics. We are also now measuring down to the Greeks. I believe this one also includes a chart or a plot, but yeah, there you go. So right here, all this data is all the different data points, observation points, I guess you could call them, that generate these two plots here. So let me just show you that. But anyways, you have the sigma forecast. You also include the mean forecast. So I'm going to show you a blown up version of this chart, which this will measure the volatility for this particular stock over its past, and then it will be able to calculate on its estimation on where that volatility will go. Let me just show you another chart which is part of this model as well. This one also includes your 10-period volatility forecast. So this is what it looks like, and it's using your different standard deviations on how far away it will be, how many standard deviations you can expect. That's pretty widely used throughout a lot of the institutional investors. We really hear how many standard deviations they are away from their estimated curve and that sort of thing. So there's some good volatility, which is really important. I'm just quickly going through. I have these are all quant based, what I'm showing you, using obviously some advanced math, and again I'll be showing some the algorithms used for that. But there's also some uh, traditional models that I have, like moving average with RSI as well. There is an evolutionary model, which I'm going to show you as well. So in this case, an RSI moving averages. This one's quite involved to generate, but it does generate a graph for you or a plot. And here's a detail of it. Your RSI includes your annual Sharpe ratio over a certain period of time. Obviously, you can see some movement here, which looks like a pretty good bet. Here's your position against your cumulative return. And again, this is all estimated at this point right here, what I'm showing you. So these are pretty powerful models as far as I'm concerned. Let me show the evolutionary one as well, the evolutionary learning, which is another powerful. This is more of an experimental model. It's using genetic algorithms as part of its generating. I'm still trying to learn this myself, but again, I'll have another video down the line on this. I don't put a lot of weight behind it, but there's a lot of people that purely believe in it. And what it does, it will give you these different bit positions against your individual and your population on these different samples. There's some other estimating graphs as well, or plots that can be helpful once you understand what they are. And again, here's your Sharpe ratio, which again is the maximum, which in this case is 18.2, which is relatively high. But again, it's all estimated. Let me just show you another one here from this one. And again, the Sharpe ratio as it estimates out, it's predicting a 39.2. The measurement on that, I'm not sure how that would be, let's say, believable. But it's all there. Some of it's early days on these models, but these are the sort of things that can be fairly useful for people. One that I really like is co-integration. I can show you that one, which is kind of cool. I really like this model. It's kind of like the similar as to pair trading. Again, this is all using pure math. In essence, here's all your data points. And again, you do get a plot for the co-integration. Let me just get to the bottom of it. Hold on here. Yeah, here you go. You got two. So basically what I've done is, again, these are all high performance stocks. So in this case, I have the symbol of NATU3SA, as well as the measurement is against the benchmarked against the S&P 500. So you can see that this performance of this stock is quite high compared to the S&P 500, but that is not where the cool part is. It's really the other graph that contains some really powerful information, which is quite useful for anybody that is familiar with pairs trading. In this case, you have your 0, which is your benchmark, but this right here being 0, this is your entry point, and then you can have a measurement where you know, once you dip below that 0, that's your exit. So this is a good benchmark to use for your entry and your exit using this powerful co-integration. Something I really like. And then there's also various other estimating ways to trade. Let me show you a few ones. A Garch, or just to simply there's an arch. Let me just see. I'm gonna use called arch tester. I'm gonna have some documentation courses on this as well down the line for the members. Maybe just give me a second here. I gotta search it. This is all fairly new. It's all under development, but it should be finalized in the next few days to weeks once everything's all ironed out. So in essence, I'm going to show you the Garch instead. Uh, the Garch and Arch are fairly similar. It's just one extends off the other. And again, in this case, we show you the Garch measurement as well as the Arch measurement if you are familiar with either of those. And those are different measurements or metrics that are used to measure the potential of profitability with different assets using this Garch metric. But again, I'm going to be showing some of the online courses for that. There's some other really cool stuff that are other measurements as well. There's I don't know if everybody knows what a beta alpha is. That's pretty widely used now, which comes from the Greeks. And again, here's a one stock that we've looked at, natu3.ca, and it will measure the alpha, beta, sigma. And this is this would be your alpha, this would be your beta, and then this would be your sigma. So in essence, that's in there as well, which is part of your metrics that you can use when to get in, if it's doable or not. There's some other very cool models that I can show you. There's so many I can only show you in a matter of a short period of time, but I'm just going to show you just trying to think of a few other ones that I could try to give you just a brief overview of what's out there using some of these models. We've got various testers that can give you a quick synopsis on what's good and what's not good to move ahead with when it comes to deciding if an asset is good to trade with. So in this case, we have another graph which is for the forecasting multiple realizations. Again, these are the data points that can be used. I'm probably going to need to make some improvements here on this data so that people can download it and drop it into their own platforms or their own analytical tools. Let me think of something else I can show you guys. Oh, there's just so many. I can show you the CAPM. But I'll leave it to you just to give you a brief overview if this is something that might be good for you. But right now, there's just so much. It's pretty hard to manage. There's so many. So I'm going to just show you one more, the ratio test. This is for variance. Okay, here we go. So again, we got this HLDX, which measures the variance on a particular graph, and then you get your different stats. This right here is an important indicator of H, meaning if it's a good stock to trade with or not. Anything other than less than 1, being 0 or -1, is an indicator of market efficiency. So again, I'll be showing some of the classes online for paying for the premium members, just so everybody knows what these are, and gives a very good quick synopsis on how everything works. So just as a brief overview, these are some of the new models in place now. Hopefully I'll help you out.